So you just learned about investing and you're excited to get started. You already know that the stock market is where you're going to make your money, but you don't know how to get in. And on top of that, you don't want to get overwhelmed with the data you need to make the right moves. Well, if that's you, then what you need is the ETF. Hey, it's Cash from Lehman's Investing, where we give you the basics on investing to become one step closer to financial independence. If you enjoy content like this, like, comment, share, and subscribe. An exchange-traded fund, or an ETF, is a basket of investments like stocks or bonds. This company is buying stocks or bonds in a bunch of different companies and places and presenting them to you. You then can buy shares in that fund and your own stock and bonds in several different companies as well. This helps you diversify your portfolio, protecting you against market volatility, which means when the stock prices go up and down. For example, let's say you invest in Apple and Apple only. If Apple has a bad year, then your whole portfolio has a bad year. But if you had Apple and let's say Facebook and TikTok, then if Apple has a bad year, but the other two companies have a good year, then your portfolio is still green. Another pro to investing in an ETF is that you can also dodge capital gain taxes. Most ETFs have a low trade volume, which means you'll only incur capital gain taxes when you go and sell the investment. This means you'll pay less taxes on your ETF investment overall. If you're invested in an ETF, you get to decide when to sell, making it easier to avoid those higher short-term capital gain rates. ETFs have a low barrier of entry. There's an ETF for every budget. The average price of the most popular ETF by trading volume is about $60. The most expensive ETF that list tops out around $4.75 and the lowest comes in around $4. Outline how much you're willing to spend on an ETF before you dive in, and I'm sure you'll find one that will fit your budget. But budget isn't the only thing to consider when choosing an ETF. First, you should define your goals and identify your investment objectives. After you know that, identify the ETF that can help you do it. Depending on your goals, investing in one of the broad market ETFs may be a good fit. There are also some funds that are composed of commodities, currencies, or other investments like fine art, and maybe one of these could be a better fit. Lastly, check the performance of the ETF. Past performance doesn't dictate the future results, but it's important to know whether the fund you're invested in actually makes money. There are lots of great ETFs out there, but here are a few popular and safe ones you can check out. So now you know how to get into the market with little risk, and maybe now you can become the next Warren Buffett. As always, thanks for watching, and subscribe, like, and comment if you want more content like this.